Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for September 15th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We just had a slew of economic data just released, and the markets are now reacting to that data. We have quite a bit more data here to come over the next couple of days, but after the recent decline that we've seen the market kind of stabilize here just a little bit at these lows. Bears continue to defend previous lows as resistance, which is important, and then the 2100 to 2103.75 level, very important zone of support as well. So right now we have a very good range here to do business in, and that's a zone that we could watch here. One of our traders in the trading room mentioned this new key range from this bounce up, and that could be the key range here to watch for near-term trading range activity, at least over the next week or so as we kind of shake out. But failure to hold inside this range here can open up the next key move. So if there's any failure to hold that 2100, I think the next zone down is going to put you right into 2050 with composite VPOC right now being about 2065s. Let's take a look here at the intraday time frame. Here's the intraday time frame. One thing that I noticed here right away, the previous session's low here, we saw price go offered through it, pushed back above it, and then made it support, and ever since we've been trending higher. So that was done in overnight trading after hours, and then we've seen the continuation. You see VWAP sloping higher here. So right now pullbacks are being defended, but we are coming back to a very important level, which I think is the pivot in the chart. The main pivot right now to be watching is 2120. 2119 half is also the key, the top of the key range from the Brexit move. So basically that 2119 half to 2120 is a major pivot in the charts. And what we're watching for is an over-under here. So above that level could open up some movement to the top of value. Below it opens up a push probably to new lows. So keep an eye on that level. All right, let's take a look at crude oil. Here's crude. Let's take a look at the daily time frame with PivotBoss pivots. There we go. We continue to see development within this triangle type pattern here, right? So this is the pattern we've been watching. We've been talking about further sideways activity within this range as it kind of builds out toward expansion. Whether that expansion goes to the upside or downside remains to be seen. It could go either way, it really could. And this pullback right now, I know it broke through two-day lows here. Typically speaking, when that occurs, any pullback toward the midpoint or even into those lows is likely defended for a continuation downward. That's typically what you see. So right now, the midpoint of this range is 44.38. The previous lows up here were 44.70. So right now, 44.38 and 44.70 are very important levels that bears will want to defend, but until then we could see this thing trend higher toward those levels. Once defended, we could see a push into new lows. I talked about before, failing to hold above 43s could be significant and could spark the new wave downward. So that could be a major event, but we'll watch to see what happens between 42.60 and 4300 from a swing basis, as that could be a trap area for bulls looking to reverse this thing back toward value. Okay, let's take a look at the intraday time frame. Here's the intraday time frame, very similar to the ES here. Here's the previous session's low price. You can see in pre-market trading, price pushed below it and then immediately took it bid back above it. And since then, VWAP has trended higher and value has been defended on pullback so far. This implies further strength, at least in the short term, back toward, remember, that 44.38, the previous session's midpoint. This is going to be a zone where bears want to defend for a shot at returning price to value. If bulls are able to push through that area, then the next zone above is 44.70. So basically between 44.38 and 44.70 is the zone where bears want to control for a shot at returning back to value. Above that zone likely leads to more strength back above 45s. Okay, let's take a look at gold futures here. Gold futures. All right, so this one here has been mostly sideways within this range in terms of a longer term move, but it's had great medium term swings, right? Great swings. back up, down with a little bit of absorption, all the way back down, then back up, failing to hold 52, so now back down. So this one has been really, really nice trading off the edges. This previous week's close right here, very, very important. Right now, prices were not able to hold. Remember, we had that higher value with a change of bias, and bears defended the pivot range. We saw a move to the 25%. This is the 25% expansion of the previous week's range. Price bounced there, and today we're seeing bears come in and redefend the previous week's close. So right now, that's the most important price point short term, as bears are looking to create a lower high and push this thing down to the next lowest key level, which right now would be the 50% expansion pivot, and that is 1309.30. All right, let's take a look now at the NQ. Here's the NQ. This one is significant right now because we've had a big bounce. First, a big drop, and then this one in one day reversed it all the way back up with a huge thrusting pattern. And then what you see right now is mostly holding pattern. It's just, it went from a big stretch, and now it's very, very tightly coiled. The next move is coming, but this is fuel. What you do notice here is on this big thrusting pattern here where price pushed below the previous low by a wide margin and then closed well above the previous session's midpoint. The next session right here is a retest entry right at the midpoint. That's the midpoint retest. That's where bulls came in and defended and pushed prices back up. And so ever since then, we've kind of been holding at the upper extreme of that retest day and just kind of holding on. That would typically be bullish here. But we do have bears that are defending that 47.60, which was prior support turned resistance. Very clear levels on both sides of this market. Very difficult to call any directional bias other than to say, at the moment, we have a wider trading range that has developed. We traded in the upper part of this range. Now we've expanded the range. Perhaps we trade in the lower part for a little while. We don't know how it's going to play out just yet, but we have some clean edges here to watch out for. So back above 47.60 rallies this thing back to highs. Failure to hold above 47.15s here could open up a return to 46.80. So we have some ideas here. Let's look at the intraday time frame. Here's the intraday. Again, very similar to the ES and crude oil. Price pushed below the previous session's low. That's why I love failed range expansion. I'm always watching the previous week's range, previous session's range, previous month's range, whatever it may be. Highs and lows matter. And when price pushes below that low and cannot establish acceptance below it and pushes back above it, that's rejection. Rejection leads to a move back across the previous range, typically speaking. And so right now it's making a very nice uptrending move. Again, 47.60 is a key level, so that's going to be very, very important. If we push through that zone, we have a date with 47.67, which is the previous session's high. That could be a point here where bears come in and push price back toward value 47.44s. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.